Elon Musk just gave Tesla stock investors big advice that will help them financially in the long run. Elon Musk and Warren Buffett, the famous investor, may disagree about the long-term value of cryptocurrencies, but they seem to have similar investment philosophies when it comes to the stock market. As two of the richest people in the world, it stands to reason that their advice is credible. Musk, who is the richest person on the planet, according to the Bloomberg Billionaires Index, offered some financial advice in a tweet on Sunday. Since I'm asked a lot, I recommend buying stocks in many companies that make products and services you believe in and only selling them if you think a company's products and services deteriorate when the market goes up. Don't panic. The tweet reflects Warren Buffett's value investing principles, which made him famous. Why did Musk give this advice? How does this apply to Tesla stock? We'll be going deeper into this, so be sure to keep watching. Tesla and SpaceX CEO Elon Musk has revealed his investment approach, which he believes will serve you well in the long run. Some have compared Musk's strategy to that of Warren Buffett, CEO of Berkshire Hathaway. Musk specifically stated in a tweet that people should invest in companies whose products and services they believe in, and only sell when they feel a company's products and services are deteriorating. His tweet received mixed reactions. Some people agreed with Musk, while others disagreed with him on certain points, such as whether or not to hold overvalued stocks for the long term, and whether or not to ignore all market movements. Some saw Musk's counsel as a warning that his electric car company, Tesla, would soon receive some bad news. We do not believe this to be the case. As experts like Buffett have proven, stocks are a surefire way to amass wealth, and Musk's advice carries similar principles to Buffett's known as the value investing doctrine. You can only get those from companies whose business plans you trust and understand when you invest in value stocks, and ideally, these companies are inexpensive and have the potential to generate higher revenues over time. Value investors do not tend to follow trends or short-term stock movements in the market, as they look for trades based on their own study of a company's inherent value. According to this logic, for example, Twitter represents a valuable investment for Musk, as his board of directors recently accepted his offer to buy it for $44 billion. In a statement announcing the deal, he intends to open potential networking sites. Huge potential. Musk advised his followers, "Don't panic when the market panics." Musk also quotes Warren Buffett as saying not to follow the majority, even when the market is down, saying be greedy when others are fearful and fearful when others are greedy. Musk also tweeted about inflation in March, saying that it's usually better to own physical assets, like a home or shares in companies that you think make good products, rather than holding your money in cash during periods of extreme inflation. Although he has been known to support the cryptocurrency movement lately, Musk warned people against betting on cryptocurrencies, adding that the real value is in making products and providing services to your fellow human beings, not money in any form. A few cryptocurrency supporters have stated that they follow Musk's advice and support projects they believe in, regardless of the values of the underlying currencies, which is somewhat unusual for cryptocurrency investors. Let's dig a little deeper into value investing for a second. Value investing is an investment strategy that involves purchasing securities that appear to be undervalued based on fundamental analysis. The many types of value investing stem from the investment philosophy of Benjamin Graham and David Dodd, which they initially taught at Columbia Business School in 1928 and later explained in their 1934 book Security Analysis. According to prominent proponents, such as the chairman of Berkshire Hathaway, Warren Buffett, the essence of value investing is to buy stocks for less than their original value. That is, buying stocks that are undervalued because their current price is much lower than it should be. You're probably thinking, isn't Tesla a growth stock? So how does this apply to Tesla? As the late 1990s revealed, value companies did not necessarily outperform growth stocks. Furthermore, when value stocks perform well, it does not necessarily indicate that the market is inefficient. Alternatively, it could indicate that value stocks are riskier and therefore require higher returns. Applying the principle of value investing can be a bit difficult here, because many people believe Tesla is overpriced. We believe this is clearly not the case, as discussed in many videos on this channel. Stocks in public companies trade at a discount to book value or tangible book value. Companies with strong dividend yields and those with low price to earnings multiples or low price to book ratios were among the early value prospects discovered by Graham and Dodd. The main point of value investing is to buy undervalued stocks. However, it is important to note this. When you buy stocks in a bear market, prices may continue to fall as the market declines, even if they appear to be discounted at a certain point. On the other hand, in a bull market, not buying stocks may cause prices to rise along with the market while looking expensive at some point. Furthermore, one of the most common criticisms of price-based value investing is that the focus on low prices and recent low prices often misleads retail investors. This is because fundamentally lower prices that have fallen recently often represent a fundamentally sound difference or change in the relative financial health of the company. The key point here is to identify early value horizons. How can one do that? As Musk advises, rather than following the majority of what people think or how the market will swing, it's important to take a critical look at the business you're investing in and study potential future opportunities that will lead to higher returns. This involves looking at the business's values, goals, products and services, and where it is headed in the short and long term. Musk advises that it's best to look forward and focus on the long term, and we couldn't agree more. Now let's apply this concept to Tesla. As we said earlier, many believe Tesla is overvalued at its current price of $865. Tesla is a puzzle to investors because it is both expensive and cheap at the same time. Assume that the company is considered a pure automobile company, and that the valuation is based solely on the number of units sold multiplied by the average selling price of the cars. In this case, the analyst believes it may be overstated. However, as an onshore green energy infrastructure company, the company is significantly undervalued. The main reason investors buy Tesla stock is its future development, not its past success. Tesla can only be evaluated through the lens of its development. When we use this method in practice, we discovered that the current market price of the company is more reasonable than it seems at first glance. That's why it's important to do your homework, not follow the crowd and figure out the intricacies of any business you plan to invest in. This way, you have a solid foundation on which to build your investment strategy. Several people have suggested that Musk is using this tactic in his bid to acquire Twitter. Last Monday, the richest billionaire in the world agreed to buy 100% of the social networking site for $44 billion. Musk sold nearly $8.5 billion worth of Tesla shares in 3 days after announcing an agreement to buy Twitter in filings with the Securities and Exchange Commission on Thursday and Friday. Musk revealed that 9.6 million shares were sold. Trades were made totaling $822.68 to $999.13. Musk also sold more than 4.4 million shares in the company, worth nearly $4 billion. Musk must spend $21 billion in his personal capacity so the money can be used to buy the microblogging site. Musk also chose to bring in outside investors to help him raise some of the money he'd need to buy Twitter in the first place. According to Bloomberg, 19 investors are listed to fund $7.1 billion of Twitter's $44 billion valuation, including billionaire Larry Ellison, Sequoia Capital, and a Saudi prince. Morgan Stanley and other financial institutions agreed to provide $13 billion in financing and $12.5 billion in margin loans in exchange for Musk's shares in Tesla and other companies as part of the agreement. Knowing Musk, this investment in Twitter will undoubtedly pay off in the future, and we look forward to seeing how his investment advice plays out. How do you choose a stock to invest in? Comment below.